I got a question about M1. So there's not really a large focus on dividends, is there, M1? I guess it's more of like an active but systematic type of way of trading it. So you guys were saying you were selling Apple today, and I'm trying to hold on to all my Apple stock for dear life so I can just hold on to these dividends forever. So M1 is, I guess, not as concerned about dividends. It's more about the rotational aspect.
No, I mean, they focus more on like this, just the systematic part of it. Where again, you're going to get the dividends. You know, for those names that I'm buying, other than Apple, and maybe CRM doesn't pay a dividend. So pretty much all the names that I'm buying individually, other than Apple, don't pay dividend.
Okay.
Obviously, the sectors, all the big picture ones, they all pay dividends. So the average dividend yield on the big picture is 1.7%.
Okay.
Apple's dividend yield is probably around 1% right now. I don't know. Was it 88 cents? Actually, might be 0.5%. Their dividend yield. But that's like the dividend is always like the cherry or like the sprinkles on top of the sundae. Where, you know, for me, am I going to give Apple back 35% for 0.5% in dividends a year? That I'm not going to do. But so that's where I just treat the dividend just as like the bonus, the 1.5% or so for the big picture, which I'll get, a quarter of that every quarter. But they mentioned like when you're on the home screen, it'll show you like dividends earned and they'll email you and you get paid out dividends. But I'm not trying to hold a name just because the dividend, because it's often such a small sum relative to what the stock is going to do.
Okay, that's fair. My thinking is that, if I'm in these stocks for long term, years and years, the dividends, when the stock gains like a significant percent, the dividends will start multiplying in your favor. So that's kind of what I was thinking about in regards to that M1. But I guess you guys aren't. It's more rotational, more active trading.
Yeah, because even like the only names where like like in that spot where it's gonna like add up is like a name like Verizon that's gonna pay out 5%. Where like the rule of 72, if based on that dividend yield, it's like if you put $1,000 in Verizon, it would take you, I think it's like 12 or 13 years to double up that $1,000 to $2,000 on the reinvested dividends.
Yeah.
But when it's like for Apple at 1%, that's like 72 years for that $1,000 to double because it's such a small payout. So that's That's where I just treat it more as like it's a bonus, but you're not gonna
see the dividend.
you're not retiring. If you had $1 million in Apple, you're making like 10 grand a year off the dividend. Where that $1 million in Apple could grow to 2 million or drop to 500 from just the share, the fluctuation of the share price.
Yeah.
And that 10 grand isn't gonna change the person's life that much compared to the share price.
Yeah, absolutely. You just hear stories like, and this is what my goals in my IRA and things like that, of guys who bought, Home Depot. It's $320 now. Bought it, years and years ago for like $60, $70. So now the dividend is almost, twice whatever his cost basis was. Yes, it's like 10, 15 years later, but that's what I was kind of wondering from an M1 aspect.
Yeah.
But
the only crazy one that like I've ever personally been involved with was like, and in that example, it's like I bought Ford back in 2008 at $1 and then like sold it literally 4 days later at $2. But at the time, like if I had kept Ford until today, even though they don't really pay a dividend now, I'm pretty sure they cut it or they're like just randomly paying them out. But from 2008 until pretty much like 2019, they paid them out pretty consistently. And they were paying out, even in 2020, 60 cents a year in dividends. So on my $1 a share investment, I'd be making a 60% return yearly on that dividend. So I think that's kind of like what you were going at with that. Yeah. But again, of course, I sold Ford literally like 3 days later and thought I was like a genius making $1 on it. But that's that example of like it was like 1,000 shares at $1. It was a $1,000 investment. I would be making basically $600 a year off of that dividend. And with some of the oil names, like even when MLPs got really destroyed, it was like 2 or 3 years ago, there were some MLPs that were trading at $80. They got whacked down to $4 or $5, still were paying out a crazy dividend. And if you actually bought it at $5, and then within months it was back into the 30s and 40s, you were still getting like $5 a year in dividends. So you were making like 100% on it. But those are like those kind of Hail Mary
Right, very rare scenario.
situations. It's tough at like we're never going to get those trades in like an Apple from the dividend. It's going to be like you mentioned, like Home Depot from 30 years ago, that you have like an insane cost basis, that when those dividends do come into play, you have such a crazy cost basis that like it's nutty. But when the stock's already really developed, like Apple, it's going to be hard to really bank it off the dividend.